I shall be taking us through issues concerning self-assessment and additional assessment by the taxman. First, the self-assessments as you know it, basically these are normally the assessment that we business people or individuals do and then pay KRA based on the self-assessment that we've done. However, at times if in the event that the commissioner is not satisfied with our self-assessment, and this dissatisfaction by the commissioner can kick in as a result, let's say, of their investigation. They may have gone through your bank accounts and realized that there is a lot of undeclared income. That one can make them to write you a demand notice. Also, KRA basically also, they do their audit investigations. They will have to review, they do compliance tests, and also review the returns that we do year in, year out. And in the event they realize that there are too much, you've claimed too much expenses, they'll want to do an investigation to verify why you are claiming too much expenses. The reason why they'll have to investigate this is because the more expenses you've already claimed, it means that your tax liability will go down. And as usual, a taxman will want to see how come your tax liability is down and your expenses are high. Then that one will kick in some investigation. Also, if they identify the gaps, there are gaps that can be identified. This gap can be because of, let's say, VAT inconsistencies. You are selling and you are not declaring, or the person who sells to you and it's not declaring. So because the taxman will always want to see, is there a corresponding purchase or a corresponding sale? Otherwise, in the event that they find the person you've sold to some items, that person have already identified and have already furnished KRA with the data to show that they have sold to you, and the other person haven't, then that one actually kicks in. That will be as a result of the gaps that they have come up with. Also, a taxpayer, the moment all these things, let's say the time limit, a taxman needs a time, they can investigate to a maximum of 5 years backward. But this one can be stretched if in the event the commissioner can be able to prove there is a fraud. This one can be moved backward even to 7 or 8 years. So be warned that this 5-year time limit is just in the normal scope. But in the event there are issues, the taxman can waive that and go even beyond the 5-year time limit. So my call to you as business people is that, one, let's learn to do what we call our audit assessment, our health check. Let's do health checks in our books to see that that which we declare to the taxman is indeed that which belongs to a taxman. As you know, it gives Caesar what belongs to Caesar. So with that, for today, I'll just be calling upon us that, one, we need to be very, very careful when we are dealing with the KRA. And some of these issues can be well dealt with when you on board a person is well qualified. There are very many good accountants out there. You can be able to get in touch with one and they can be able to do a good job for you. Thank you and have a blessed afternoon.